Hey everyone, Josh Martinez here, and welcome to video 3 of our Future Foundation series. Today we're going to discuss how to read a chart. So let's get started. So what we're looking at is TradingView. This is a TradingView charting software. You don't have to use them, but I like them, so let's get going. So what you're looking at is this is what's called a Japanese candlestick chart. And a Japanese candlestick chart represents price movement over time. So down at the bottom is going to be your time and date. Right hand side is going to be the price of the underlying asset. Now we are looking at the NASDAQ 100 E-mini futures. And these little bars, these bars are pretty interesting, right? So a red bar means that during that time period, price fell. A green bar means during that time period, price rallied. So meaning that the market closed below the open price, that's red, and the green bar is price closed above the opens, that's green. These long wicks, these just means during that open to close price movement, this is where the market once was. And so we look at these candlesticks and they tell us a story. They tell us, we call them the sign language of the market. And they let us know when buyers are in control, and they let us know when sellers are in control. And then we'll use techniques like trend lines and Fibonacci's and counter trend lines. And then indicators can be built and automation can be built all around what these Japanese candlesticks can do. And so how do you read this? Well, it's really, really straightforward. Green means market went up, red means market went down during that time period. You can alter your ticker symbol by just typing in what do you want. I like NASDAQ, so I go NQ, but we can go ES, and that will be your E-mini S&P 500, and it changes. Now you're looking at this. I'm going to go back to NQ. You can change your time frame. So right now we're looking at 5 minutes. So every candlestick represents 5 minutes of market movement. I can change this to like a 1 hour. And so now every candlestick represents 1 hour of market movement. I can change this to a daily time frame. Now, why would I do this? Well, normally larger time frames have a little bit more of like a price action swing. So it's a little bit easier to see direction on larger time frames, less market noise. Smaller time frames, you have smaller risk, but you also have a lot of market noise, like fundamental announcements, emotionally driven reactions. So the larger the time frame, the larger the risk, the larger the reward. The smaller the time frame, the smaller the risk, the smaller the reward. And so a lot of people like to trade futures off smaller time frames because you can try to go after those quick market movements, but the trade-off is you have to be able to weather the storm of like these emotionally driven market reactions. So how do you read a chart? Super simple. You're going to look at a Japanese candlestick chart, measure price movements over time. Red means the market's going down. Green means the market's going up. You're going to learn additional techniques that's going to help you identify direction inside the market, where to place stops, where to place limits. And down here at the bottom measures your time, and on the right-hand side measures your price. All right, everyone, that completes video 3. My name is Josh Martinez. Appreciate the opportunity.